Hello everybody, Michael here. Welcome to day 8, the Simple Trade Profit Systems training course. This video is going to be a little different. We're not going to do any training, but we are going to go over Bybit, which you've heard us talking a lot about, and just really show you how the exchange is set up and why we like it better, and why I think you guys will like it better. So there's a couple different reasons. Two main reasons why I like it better than Binance or BitMEX. Maybe you've heard of some other ones. So after you create your account, you're going to land on a page like this. And if you're already familiar with exchanges, then this is going to come pretty easy to you. You already know half of what you need to know. The only other half is shorting, essentially. So when you're on Binance, when you buy and sell Bitcoin on Binance, they call that spot trading, S-P-O-T, spot trading. That's just the term they use for it in the crypto world, spot trading. So you have spot trading and you have margin trading. Bybit is margin trading is essentially using leverage, but why I recommend Bybit, even though using leverage is risky, is you can set your leverage all the way down to basically nothing, and it's the same thing as essentially spot trading. And it gives you the ability to short as well, because a lot of our trades are going to be shorts, especially like, if we were to reverse or something and we start trending down, then we're going to be looking for only shorts. And if you're on Binance just spot buying Bitcoin, then you'll never have an opportunity to place a trade if we're in a downtrend, because all of our trades will be shorts. So this is the page you're going to land on. You can see here are the coins that they have: Bitcoin, Ethereum, EOS, I don't use that one, and XRP. And I'm just going to go through some things here. So before we get into the trading part, let's look at, click up here on promotions, go to the rewards hub. This is what's really cool. Me and Drew have both done this. Go to the rewards hub and you can get free money. So you can get $5 whenever you register and join our social media channels on Twitter. So you have to retweet their pinned post, and then you submit it. Basically, when you click claim now, it'll tell you to submit the URL, the link to where you retweeted it, and they'll send you $5. You get $5 if you enter a take profit and a stop loss when you place your trade. So I did that one. You can see I got awarded. First deposit of 0.05 Bitcoin, you get $5. First deposit of 0.5 Bitcoin, you get $50. If you take a survey, complete the Bybit customer satisfaction survey, it's like 10 questions, you get $5. Or it's a coupon. So you can see some of them say bonus, some of them say coupon. The difference is some of this money you can actually trade with. My balance increased on some of it. The other parts are coupons that can be used for paying for your fees. When you place a trade and there's a fee with that trade, these coupons will cover that fee. So you basically you don't get a fee at all. You get $20 after you deposit a full Bitcoin, and you get $5 for actively trading for 10 days accumulatively. So I got this one, this one, and this one. So pretty cool. Free money. There's some rules and, the FAQ section you can read through. But up here at the top, you can see I've been awarded $20 so far. I think 10 or 15 of that was actual trading money that went to my balance. 5 or 10 of it was money that can be used for my fees. So if we go to click up here on your account, go to my assets, and you can see that right here it says bonus 0.00072,159 Bitcoin. So, and if you read this, prizes can be used to open positions as taker fees and funding fees and take it profit and loss. Prizes cannot be withdrawn. Any attempt to withdraw will cause the prize to be forfeited. So these are the bonus ones that I was speaking of. All right, so yeah, so here from assets too, you can deposit, withdraw. There are only 3 times during the day, 3 specific times that they process withdrawals. So if you withdraw at like 9 a.m., it might not be till noon that is one of their times that they process withdrawals. So it doesn't happen automatically. It's on every day at 3 different times they do withdrawals. They handle the withdrawals. So to trade, you come up here. They have BTC USDT part, and they have inverse perpetual. I don't know what that literally means, but this is the one I use. This is BTC USD. So if you click on that, it'll take you to the actual chart. And I'm currently in a trade right now, so this is pretty cool. You guys get to see this, and I might be adding to it as we go. So it's currently up 1.3%. And this is it, guys. So over here on the right is, well, let's start over here. So you have your order book. If you're familiar with Binance, you know what that is, your order book. Recent trades. These are all the trades that people have placed when you're under market. If you click on mine, it'll show you all of my trades. So these are all my trades that I've placed recently. So you can see all my ladder trades where I bought in and then started laddering more and more and more buys. So all these trades right here that I placed, they're all in this one. They all average into one single trade, which is cool because on Binance this doesn't happen. Whenever you place a trade on Binance, it shows it as a separate trade each time. This one, it averages them all together into one trade. So like I'll do a buy right now. I'm gonna put $5 in here. I'm just going to add to it, hit buy, and watch right here, this area right here. So I'm not doing $5 because I have my leverage it. So it's actually $1. No, it's not even $1. So this will move up, but let's click buy. So now this is at 60. So I'm trading with $60 now. This moved up. This is my average price right here. That means that my average entry, my entry into this trade was at 7,336. And if I click buy again, that's going to move up because price is higher than that right now. So what I've been doing is as price comes down, I'm buying more, and my average entry goes down. And I don't know if you guys can see, my entry is, oh, it's this green line right here. So if price, say, was down here, and I continue to click buy or put different amounts and hit buy, my entry would start to come down, because it's going to average, because price is down here, so it's averaging my trade down lower and lower. That's what I mean by ladder. I'm averaging my entry down, which it may be confusing to you guys because you're using Binance. You'll just see it as a whole totally separate trade, you know, but this one averages it all together, and it's really freaking cool. So most of this stuff you guys will be familiar with. You guys know Binance has limit buys. It has market buys. Conditional is kind of like OCO. I don't really use it. I think limit buys essentially do what a conditional buy does. I haven't quite figured out what this does differently than a limit buy or a limit sell. So I use limit if I want to. Pretty much if I'm sitting in front of the computer though, I just do market. I don't need to do limits, you know, unless I plan on walking away. So right now I'm currently on, you can see my leverage says 7x. Here is your bar to change that. I think by default you start at cross. Don't ever, unless you're like a professional trader, don't ever use cross leverage. That is like more than 100x leverage. That is, you know, you're asking for liquidation pretty quickly. But as you guys can see, let's look at something I want to show you. So if you look down here, this says $60.50. That is how much money I have used on this trade. I'm trading with $60 essentially. My quantity right here though is 420. So I'm only using $60, but I'm trading it as if it was $420 because I have 7x leverage. Because if you multiply 60 by 7, you're going to get 420. 60 times 7, 420. So I'm trading with $60, but I'm on 7x, which means that my trade is actually worth 7 times more than what I actually used. So this is why using this leverage can be cool, because it can be risky, but it can be cool because you can risk less of your money, but trade it as if it's more. So I'm only risking 60, but I'm trading it as if it's 420. So the way you figure that out is it's a pretty simple math formula. I recommend, if you're starting this, just stay on like 1 or 2x. 1x would basically be like no leverage. 2x would be double. 2x would mean if you were on 2x, and let's say you had $100, okay, real simple. You have $100. Your available balance is this amount of Bitcoin, whatever $100 is of Bitcoin, okay? And you want to place a trade, but you don't want to use you don't want to risk your whole account. You only want to risk, to keep it simple, the math simple, let's say you only want to risk $50. So you want to trade it as if you want to trade like it's 100. Like this trade's going up pretty well right now. So you want to trade it as if it's 100, but you don't want to use your full 100. You only want to use 50. If you set this to 2x and then you type in 100, then you will be trading it because quantity USD. So that means you're trading $100, but your order cost, which is down here, like as I change these numbers, watch. Look at the order cost down here changing. So if I had my leverage set to 2x and I typed in 100, my order cost down here would only be whatever $50 is in Bitcoin, because 50 times my 2x equals 100. So to figure out how much your order is going to cost, you take the quantity that you're going to use, divide it by your leverage. That's how much it's going to be. So I want 7x, for example. So let me think of let's do, if I do 49 dollars divided by 7 equals this right here. Let's see what this is. This should be $7 worth of Bitcoin, I would think. 0.0009. Yeah. So after it comes out to about $7. So you can see that if I'm trading, if I place this trade, I would be trading $49, but I would only be using $7 of my balance, of my available balance. So if you guys stay on 1 to 2x, 1x means whatever you type in here is what it's actually going to cost you. If you have $100 in your account and you're on 1x and you type $100 in here, the cost of your order is going to be $100. And when you come down here to this position, it will say $100. If you're on 2x and you type 100 in here, your cost is going to be $50, because basically the trade costs you half as much. It costs you half as much because you're on 2x. If you put it at 5x and you typed 100 in here, the trade would only cost you 1/5 of $100. So 100 divided by 5 is what? $20. So the trade would cost you $20, but you would be trading it as 100, and you would be on 5x. So people would be like, well, why not just only risk $20 of your account and trade 100x? And the answer to that is liquidation. This liquidation price. Liquidation, it says your position will be liquidated when mark price reaches this price. Liquidation means right now my liquidation price is 6,448. That means if Bitcoin dropped down to 6,448 right now, this whole trade would just be gone. I would lose the whole trade, the full $60, it would be wiped out. And the higher you raise that leverage, the closer your liquidation price is going to be to where you're currently at. If you have this on, if I change this down, so watch, I'll actually adjust it. So 6,448, I will move it down to a 1x. Oh, I can't do that. Let's move it down to 5x. So now I moved it from 7x down to 5x. You can see my liquidation price is now 6,139. Can I move it to 3? Yeah. So I move it down to 3x. Now my liquidation price is 5,523. So it gives me a buffer. It gives me cushion because, you know, is price really going to drop down $2,000 right now? No, it's not, you know. So you guys want to stay between 1 and 3x. You know, I've been doing this a little bit longer and I don't even use those high leverages. I'm using 7x. So you guys can play around with it, with them, do the math and stuff, play around with the math and see, but it's pretty simple. Whatever you take this number here that you're going to enter, divide it by your leverage, and that's how much your total trade's going to cost. So stay between, and if you're on 1x, well, if I enter $100 here and I'm on 1x, 100 divided by 1 is $100. 2x would be whatever this number is, it would be half of it. So if you have a $500 account and you're on 2x and you put $500 in here, the cost of that trade would only be $250. So can you see how it allows you to use less of your money, risk less of your money per trade, but still get the amount of profits as if you were using more. So yeah, that's how you guys, and I'm on market. So limit, you know, is pretty straightforward. You enter the price that you want to either buy or sell at. You again enter your quantity, make sure your leverage. Every time you sign on here, make sure you look at this leverage because it defaults. I think there's a default and it defaults to cross, and that's like crazy high leverage. I've never used it and I won't touch it for right now unless I have like a really, really big account. So stay between 1 and 2x. If you're at 2x, your liquidation price is going to be pretty far away that you're not going to have to worry about it. But yeah, so in this trade that I'm in, for example, let's go to the chart real quick. This line is where I have bought 7336, 7336. Yeah, that is where I bought. So I'm not going to go into all the details about why I bought here, but what I'm looking kind of at is this triangle I bought here, and my plan is if price comes down, because we have these moving averages and stuff, if it starts to come down in here, 7,300 area, I'm going to keep buying more, and it'll lower my entry. This line will start to move down closer to this yellow line, and it'll get my entry down, you know, let's just say I get it down to 7,315. Well, then once it goes back up, I'm getting profits anything over 7,315 because I lowered my entry down. I laddered these trades. So right now I only have 420 contracts is what they call them, 420 US dollars in there. I'm only using $60, but I'm trading it as 420. The total that I have left is 755. Because if I click 100%, it would be 755. So I start out with like 300, and then I start to ladder as it goes against me. So then I would put in like a 5 here, and if this was the drop, I kind of wish it would so I could show you. As this would drop, I would just keep clicking buy, and if it continued to drop, I'm not going to sell this sucker. I'm going to hold this because it's eventually going to reverse and come back up. I will just keep lowering my entry down. If it continued to drop, then I would get my entry down farther and farther. So when it finally did come back up, and my entry was like right here, well, as soon as it got back up to where it is currently, I'd be in big profits. So I never use 100% on my trade. I usually start with like 25 or 30% on a trade. Which if you guys are starting out, I would even probably do less. I would probably stick to like 10% of your account on a trade, and then you can ladder buys and more. So shorting is just the opposite. Think of buy long, and just flip it upside down. You put a short in, as price comes down, you get profits. If it goes up and goes against you, so let's say this is my entry on a short. I want price to go down. When I get down, I get in the green and start getting profits. Right now, I would be at a loss. If I click sell, keep clicking sell, and I have 5 entered or a smaller amount entered, sometimes I even have 1 If it's a risky trade and I don't want to risk a whole lot, I might have one here, but I'll click this like, 100 times. Like if you look at my trades over here, look how many I have. I started with 300 here, and 1, 2, 3, 4. You can see probably about 20. I've bought $5 more worth 20 different times, starting at 7,003. This is where I first bought in at 7,344. And you can see as price was down at 7,308, I was buying. 7,311, I was buying. And so this is the one I just did, 7,349. But I started at 7,344. But my entry is now 7,336 because I averaged it down lower. I laddered it down. So with a short, I would be losing right now if this was a short, just a little bit. I'm not far away from my entry. But as price would go up, let's say it was going up towards 7,400, I would keep adding more to it. And this would average my entry up higher and higher and higher and higher. So when it finally reversed and came back down, then I would be in profit. So shorting is just, we won't get into like all the technicals about, what it really means or anything. Just think of longing, buying, and flip it the other way around. You short whenever we're like at a resistance or we're in a downtrend, and you're going to make profits from it the same way as if we're in an uptrend and you're longing. So what else do we need to go over? After you enter trades, we'll go over this. So positions, and stop losses and take profits and stuff. Positions is current trade you have open. So you can see this is my current trade. This is changing, fluctuating as price moves. This is positions. Closed P&L is all your trades that you've done. So you can see all of them. You can see 1, 2, 3, 4, 5, 6. So my last 6 trades have been profit. I had a loser. This was yesterday, so I haven't even had a losing trade today. Nice. So this is your history of all your trades. It doesn't show your US dollar profit on the order history, but it does show it when it's active. So whenever you close, whatever this says is what your profit's going to be. So close P&L is profit loss, is your order history. Active, these are trades that are waiting to be filled. They're the wording, I think, is confusing. Why would it say active if it's not even active yet? Positions are the ones that are currently open. Active would be like, say you did a limit order. Say you put a limit buy in and you said, I want to buy whenever it hits 7,300. You did the limit. You entered 7,300. I'll just go ahead and do it. Let's just do 5. So I have a limit buy. I'm saying at 7,300. Actually, I'm going to do 200 just so it doesn't happen. We already went over how to do the math. So I'll do 7 because I'm on 7X. If I do $7, I'm actually using $1. So I will click buy. And you can see here now that I now have an active. One thing I need to change, because that is not the way it's going to look for you. I turn this off, shows confirmation window for orders. You may want to do it. So let me close this trade and show you what it will actually look like for you, because you'll get a pop-up. So again, limit order 7,200, 7 quantity, $1. I hit buy, you'll get this pop-up. And then I usually click this, don't show again, but this shows me my order price, the order cost, which this will be $7. I copy it, or $1, yeah, because I did 7. I did 7 USD, but I'm on 7X, so it's $1. So that's how much it cost me, $1. Available balance, your leverage. This will tell you how much total positions you will have after it, because remember, I had 420 already currently open, so this would make it 427. Liquidation price, when this trade would be lost completely, if it got there. And then it shows you the distance between mark price is current price, basically. Mark price just means where price is currently. And then it shows the distance. Mark price to liquidation price. Distance means It's $900 away from my liquidation. And then, I would hit confirm. Okay, what happened? There we go. So now it is currently in the active section, and when price comes down and hits, so you can see the line right here. When price comes down to 7,200, it would then be an open order in my positions right here, and it would actually just add into this one. It wouldn't be a second one down here. It would add right into this one. This one would change to 427. My entry price would change as well. It would drop down because I'm buying at a lower price. And then this would turn into 61.42. So let's look at active. So here's where, if I click this button here, I can do my, I can change the entry. I can change the quantity. That's not what I want to do. So I'm going to cancel this. I want to show you guys take profits, stop losses. And whenever, let's go to, whenever you place it, say you do a market trade, if you buy, sell, whatever, you'll get that pop-up window. Well, it's also going to pop up. It'll give you the option to add these things into it. You can add a take profit. So I can say, you know what, when price hits 7,400, I want to take my profits. It'll say the profit order estimate, your estimated profit will be this amount of Bitcoin. Your ROE, ROI, or whatever, it will be 6% profit. And then you can, go to, so if I did this, go and see how much USD that would be. $3.62 if I took profit at 7,400. We're getting ready to go into my trade being a loss, and I'm going to start adding to it if it goes down any farther. So you can add a take profit. You can add a stop loss. So let's say I want to make my stop loss 7,200. It'll tell me this will be a 13% loss. This is how much Bitcoin I would lose if I did that. Trailing stop. This one's really cool. Okay. This is how, when my trades get into like a decent amount of profit, I enter a trailing stop and I don't have to worry about it anymore. And it's really cool. So this is how this works. Okay. So let's say my entry is 7,336. Let's say price got up to 7,400. So what's the distance there? 7,400 minus 7,336. So it's $64 away from my entry. Okay. So price is trading at 7,400, and I want to put a trailing stop in. And I want to say, I want to give my trade, I want to trail the current price by $20. So that means if it retraces by $20, it will trigger your stop loss, your market order. So this means, so remember, we're at 7,400. I want to put a stop loss, a trailing stop, $20 behind current price. That means if we're at 7,400 and I hit confirm, my stop loss would be at 7,380 because it's $20 away from current price. Now, as price moves up, it will keep moving up with it, staying $20 behind. So as price moves to 7,420, my stop loss would then be 7,400. So it stays $20 behind it and keeps moving up. If price reverses and comes back down, my stop loss, so let's say we go up to 7,420, my trailing stop's at 7,400 because I'm $20 away, and price then starts to come down. It comes down to 7,415, 410. It leaves my stop loss at 7,400. And when price comes down and hits 7,400, my trade closes and it's in profit because I bought at 7,336. So as price moves up, it trails it $20 behind, and you can enter whatever you want. You can say, I want to trail $5 behind, or I want to trail $30 behind, whatever you want. So I usually use like 20 to 30, and your stop will trail price as it moves up at the distance of whatever you type in here. Whatever you type in here is US dollars. So I'm going to trail $30 behind. And you can essentially walk away from the trade and let it go. And if price just keeps going up, your stop just keeps moving up. And then whenever it finally plateaus and stops and comes back down, your stop stays the same. It only moves if price moves up. It'll move up with it. If price goes the other way, it doesn't move. It stays. It only moves whenever price is going. The same with a short. If I shorted at 7,400, price is at 7,300, so I'm up in the trade. I put $20 in here. That means my stop loss is at 7,320. And as price goes down, it trails it by 20. And when price reverses and comes back up, that's when it'll trigger my stop loss. So really, really cool. But whenever you first enter the trade, it will give you the option to add a take profit and a stop loss before the trade even opens up. So before you even hit the OK button or confirm button, whatever, you can enter that take profit, that stop loss. You don't enter the trailing stop until your trade gets in profit. So right now I'm at 7,336. Once this trade got up to like 7,370, something like that, or 360, then I would put my trailing stop in at 20 and I would trail it up. And then, I did it earlier and it rode it up maybe about $30, and then price reversed and came back down and hit my stop this morning. So really, really cool feature. I love that because you can, once your trade gets in profit, I know I got to wait for it to get in profit before I can enter that. But it's pretty cool because once you get in profit, you don't even have to worry about it anymore. And you could literally, if you put a good buffer on it, you could ride some of these trades all the way up and continue to trail it with your stop until it finally reverses. So it allows you to just ride trades for a long time. Really cool. The other, I'll just kind of briefly go over conditional. Conditional is kind of like a limit. The only difference, so a limit order means that you're going to put an order in that says whenever price hits here, I want to open up this buy, or I want to open up this short. Conditional is the same thing. The only difference is you're adding a trigger price. It's saying, let's say you want to buy when it gets to 7,400. You enter a conditional. You would say, when price gets to 7,390, I want you to open up a limit buy for 7,400. I don't know why they do it. It doesn't make any sense to me. Basically, I stick to limit and market. And if I'm sitting in front of the computer, I don't need to do limit. I just market buys and sells all day long. So once your trade's open, to close, you would click. So limit would allow you to close a certain portion of the trade. You say, I want to take profit on half of it. I want to let the other half continue to go. You can do that by limit stopping your trade. Market means you close the whole trade, or no, you can select how much you want to market close at. But you would close whatever portion of the trade you want at current price. Limit, I think, is going to be more like a limit would say set a take profit at 7,400. But when it reached there, I only want it to close 200 of what I have open right now. So it's basically limit allows you to set a take profit, but only set it for like a portion of your account. Because when you set a take profit right here, it's going to close your whole trade at that take profit. And then it's also got these percent buttons. You could say, when I get to 25% profit, that's when I want it to close, or 75%, whatever. Same with stop loss. I want to set my stop loss 15% away. So really cool. I think this is way more user friendly than Binance. It's really cool. So I think we went over about everything there really is. Yeah, so market limit buys, leverage, just stick to 1 to 2x. I'm telling you, stick to 1 to 2x and keep it on 2x and start playing around with these numbers. Start entering a number here and seeing what it would cost you. Change the number here and then see how much it would cost you. And you'll see how the math works. This number divided by this number is how much it's going to cost. 5. So right now mine is currently 5. 5 quantity divided by 7 is how much this will be, which is going to be less than $1. So remember that quantity divided by leverage equals the cost of your trade. If you keep it on 1 to 2x, the math will be super easy. You'll just basically, if it's on 2x, you'll say whatever this number is, cut it in half. That's how much my trade's going to cost. So stick to 1 to 2x. I'm serious, guys. Stick to 1 to 2x until you get comfortable with it. So that way your liquidation price is far away and you don't get liquidated. And then we'll start, when you hear me saying I'm laddering, it is. And I'll call it, I'm going to build a long position. What do I mean by that? I mean, I'm going to buy at this price, but if it goes against me, I'm going to start building it. I'm going to start averaging it down. I'm going to build up this really big long position by adding to it as it goes against me. That's called, basically, rather than scalping, I like to build up a position. I want to hold it for a while. I want to build it up and take some big profits. The other thing I forgot to mention, it's really cool, is fees are different in here. You don't get charged a fee for every trade you open or close. Fees happen at certain times. I think it's 2 or 3 times a day. So if you have a trade open, but it isn't the fee time yet, you don't pay a fee. The other thing is the fee changes. So right now you can see the funding rate is currently 0.01%. This number will change based on how many people have trades and stuff in. And there are times where you can have a trade in, and rather than you paying a fee, you actually get paid the fee. So right now, funding is 0.01%. I think anything, I'm going to have to verify this, but I think what it is anything, because this can sometimes go negative. It'll be like a negative 0.003% or something. So whenever this number is positive, that means that the people that are in buys are paying the people that are in shorts. Whenever this number is negative, the people that are in shorts are paying the people the fee that have buys open. So there's not a fee where it's just you enter a trade, close a trade, you pay a fee. You pay a fee at certain times during the day. I think it's 3 separate times. And the fee changes based on how many trades are open, how many types of trades, how many buys versus how many sells. And there are times where I didn't pay a fee. I got actually paid for a fee. And I'll find a screenshot of an example of that, because I was going throughout my order history last night, and there was like 10 different examples where it says refund for trading fee. So Bybit, I think they accidentally charged me the fee for the trade, and it was the other way, where I should have been getting the fee rather than paying the fee. So they sent it back to me. So there are times where you don't even pay a fee. People pay, the people doing the opposite kind of trade as you will pay you the fee. It's always really small. It's not like you're getting, but this number can grow and get really big, which means the fee increases that you pay or the fee increases that you receive. So it says funding rate in 2 hours. So that means, I think it's at 10 o'clock or something. I got to look into that more. Yeah. So the fee thing is a lot different. It's pretty cool. I like it, because there's times if you're doing scalping, if you're getting in and out of trades quickly, you may not even have to pay a fee sometimes. So pretty cool. So yeah, positions are the ones currently open. Active are ones that are waiting to be opened. Conditional would be if you get a conditional order. You got your order history, your close, profit, loss. Play around with these numbers before you do it. Play around with these. Remember, quantity divided by leverage is how much your trade will cost. Remember that as you add to the trade, it averages it all into one whole trade, all together. It doesn't do separate trades. It's all one. Really cool. I like that. Here are all your trades that you're doing. So you get your assets to deposit, reward hub to earn some free money. So I think that's it. I'm trying to remember if there's anything else. And make sure you're on, because I stick to inverse perpetual. Why? Because this is BTC USD. This one is BTC USDT. Well, on TradingView, there is no BTC USDT Bybit chart. There's only BTC USD Bybit chart. So They are different prices. So I stick to this one. I think most people use this one. There's no point in using Tether if you can use regular dollars. So I don't know why anybody would want to use Tether. So that's all I can think of. If you have any questions, just message me or Drew. I'll see if Drew will watch this video and see if there's anything I missed, and he might do a short one too. So I'm going to put the link to Bybit in the description of this video. You guys can get signed up here. If you choose not to use it and you just want to use Binance and just spot buy, then you know that's totally up to you. You might miss out on a lot of trades, but it's up to you. So yeah, the link will be in the description, and I hope to see you guys all here so we can start doing some shorting as well. Talk to you guys soon.